All right, so in the last class, we looked at introduction to technical analysis, where we looked at characteristics of price, which includes trend, uh, retracement, continuation, and reversal. We actually stopped at reversal, and we said that trend simply talks about the general direction of the market. Retracement is temporary movement against the overall trend. Continuation comes up after every retracement. The flow is there's a trend, retracement, continuation, and finally reversal is a complete change in direction of the market, complete change from uptrend to downtrend, from downtrend to uptrend. And I showed you, using the MetaTrader platform, tools that we can use to identify reversal. And I showed you stochastics indicator is one, and the RSI. But today we're going a step further by looking at other ways to identify reversal in the market, and that's through support and resistance. So let's get started. So in trading, the concept of support and resistance is, very, very important. It can change the game. It can make you a profitable trader, because it's a very, very powerful concept that has been around for very long and is one of the foundational blocks of technical analysis. So we say support and resistance are likened to floors and ceilings in the market, that is price floor and price ceiling in the market. And the support is an area on the chart that price has dropped to or struggled to break below, while resistance is an area on the chart that price has risen to or struggled to break above. Now, this is what we're trying to say. The resistance, you can see the red zone up there. When price is trending up, it will not always keep trending up forever. It gets to a point where it becomes overbought. Overbought means it has bought so high that it will not buy beyond that particular level, just like our exchange rate in Nigeria. Sometimes last year, it went as high as 2,000 naira per dollar. That's the highest we've ever seen our exchange rate go. So that could have been termed as an overbought zone. So when price trends up, it gets overbought. And when it gets to that overbought zone, instead of buying further, it rather reverses and starts to sell. So that area, that overbought zone where price could not break above is what is called a resistance. The same thing when price is selling and is dropping lower, it may sell so low to such a level that it becomes oversold. So if it becomes oversold, it will lose value at that point. And so instead of selling further, what happens is that it reverses from that point and starts to buy. So that's why we now say that the resistance is likened to the ceiling in a house and support is likened to the floor. So if I hold a ball in my hand, which is price, and I bounce it on the floor, now depending on the force with which the ball hits the floor, if it hits the ball with a very high force, it will bounce up to go and hit the ceiling, which is the resistance. And on hitting the ceiling, what happens? It will reverse and drop down to the floor. The force of gravity will act on it as it hits the ceiling and it reverses to hit the floor. And on getting to the floor, there's a tendency that price will still bounce again from the floor back up. So that is how price bounces between resistance and support. So the resistance zone is often called the seller's zone because it's at that point where you are looking for price to reverse from buying to selling, while the support is called the buyer's zone because from there you expect a reversal from selling to buying. Now, the reason why the price also reverses our resistance zone is because it's a zone that is filled with a lot of sellers because price is completely overbought at that level. And the support zone is the buyer's zone because price has dropped so low, practically almost losing value and needs, very cheap, really, really cheap at that point from where we expect price to reverse into the bullish direction. So in essence, you can look for opportunity to sell at resistance and look for opportunity to buy at support. I'll repeat that. You can look for opportunity to sell at resistance and you can look for opportunity to buy at support. So this answers a question a lot of new traders always ask, that at what point do we buy or sell? You can sell at resistance, you can buy at support. Though I will still tell you later on there are filters to still use, but that's just the general concept. Look for opportunities to sell at resistance, look for opportunities to buy at support. So why must you use support and resistance levels? Number one is because these levels are the same levels that banks, large hedge funds, and other major players place their orders. And it helps in picking the best entry, take profit, and stop loss levels for our position. So if the big banks, the large hedge funds, JP Morgan and Co., if they're using a particular tool, you should know that tool has been tested and proven, and it's been working over time. And secondly, it helps in picking the best entry, take profit, and stop loss levels for our position. So you can use it to, as your entry price, take profit or the stop loss level for your trade. So because these are levels where the market has proven in the past to have interest for buyers or sellers, meaning at support areas, the number of buyers generally exceed the number of sellers, which pushes the price back up. And at resistance levels, the number of sellers exceed the number of buyers, causing the price to go back down. All right, in this diagram, I'm going to show you simple analysis of support and resistance. Sorry, simple way rather that we can use support and resistance, identify it and even how to plot it on our chart. Now, this is just a perfect scenario. In real life, it may not look exactly as this. So this is just strictly for educational purpose. So how to use support and resistance. Now, in this diagram you're seeing on the screen, we'll start from the lower part here. Price is trending up. Just look at what I'm marking on the screen. Price is trending up and it makes a high. In the last class, I talked about an uptrend movement where price moves in a series of higher highs and higher lows. So if I'm using the word a high, I believe you can recall on that. So price, I think I should use another color. Let me use red. Okay. Just a second. Okay. I think I've tampered with this stuff. Just a second, please. Okay. So price is trending up and it makes a high. It drops low, goes up again, and makes a second high. Now, this is how you draw your resistance. Now, you discover that this second high is on the same level as the first high, which you can call the previous high. Price is closing exactly on the same level as the previous high. Now, when price closes on the same level as the previous high, it means there's a barrier that price cannot break above. That's why it's closing on the same level as the previous high. So that already tells us that this level here can be called a resistance level. Now watch what happens next. There's an arrow here indicating that we can look for an opportunity to sell. Take note, I did not say place a sell because it's a zone. There is still a strategy for entry. But generally, when price hits a resistance, you can now look for an opportunity to look for an entry. It's a lazy way of trading when people just place a trade just at resistance. Resistance can actually be broken. So there are ways around it. You need to follow the rules. So we have established a resistance here. So then we look for an opportunity to sell as price is trending downwards. Now, on this other hand, too, when price dropped to make the first low and price comes down here a second time, we have also established a support level here. And from there, you can see a green candle indicating, sorry, green arrow indicating that we can look for opportunity to buy. Price goes up a third time and closes as the same on the same level as the previous two highs. That further establishes the fact that this level is a resistance level. Again, we look for an opportunity to sell downwards where price hits the same level that we have seen price drop to twice earlier on before, further establishing the support level on that area too. Price begins to trend up again because we're coming from a support level. But this time around, instead of closing on that same level that price has hit 3 times, price now broke the resistance. That's why I said resistance can be broken. Support also can be broken. Now, when price broke that resistance level, what happened? It makes a new high altogether. Then price drops. Price drops low. This time around, it now drops low to the previous resistance level. But this time around, that level cannot be called resistance again. It can now be called a support at this point. So we say it is a resistance turned support. Resistance on the left wing, support at this current point we're talking about. So from this new support level, we're expecting price to go bullish. We're looking for an opportunity to buy, not to sell anymore, but to buy because it's now a resistance turned support. So price goes up again, makes a new high, which is on the same level as the previous high again, and that forms another new resistance level altogether, from where we can look for opportunity to sell downwards to this new support, confirmed support level. So this is how to draw resistance and support. When price closes on the same level as a previous high, it automatically becomes a resistance level. The same thing when price closes on the same level as a previous low, it automatically becomes a support level. And price can hit a resistance. You see, the more the number of times price is hitting a resistance level, the stronger that level becomes. The more it is confirmed that next time price gets to that level, and respects that level, then we look for opportunity to sell. But again, take note, it is still also possible that during times of intense volatility in the market, especially periods of news release, resistance level can be broken and support level can also be broken. Now, in this diagram you're seeing on the screen, in the previous one, I showed you resistance level being price coming back to a previous high, which is like a whole number. I like to use our exchange rate in Nigeria. Sometime last year, our exchange rate hit 2,000 naira per dollar. If we take that as the resistance level here, it means whenever price goes back to 2,000 naira per dollar, we can look for an opportunity to sell downwards. That's just how resistance works. Round numbers can be resistance at our support level. Some other time it will not be round numbers, but it's a level where price is respecting that it has gotten there before, and next time it gets there, you see a reaction, a reversal. But then there are some other times when resistance is not a whole number, where it is regarded as a zone. And that's what this diagram is showing us. Here we can see that price makes, now to explain it further, a line chart was used, not a candlestick chart. This is a line chart. Here price makes a high. Price makes a high here. This is the next high. Now, they are not on the same level, but they are close to each other. It's not the same price level, but very close price levels. The third one also is a bit higher. Now, since three of them are not exactly on the same level, this one is close to this. This one is a little bit close to this. So the three of them combined together could actually form what we can call a resistance zone. And that's why you see the rectangle being used to identify that zone. The same thing here, we have a high here, another high. They are not too far from each other. The price levels are not too far from each other. So we can see we have a resistance zone. Again, this is a support zone, and you can see the other support zone. So that's why you see on your chart sometimes you see rectangles being used to identify resistance or support. In that instance, we are only saying that resistance is not a whole number, support is not a whole number, but a zone. It's a range, a zone, of numbers. This looks very close to the chart. Here, price makes a high. The next time price closes on that same previous high level, it becomes a resistance, and we can look for an opportunity to sell. Price goes there the third time, makes another resistance, and again, we look for opportunity to sell. The same thing happening on the support side. Tools used in knowing support and resistance level. One is horizontal. Now in this diagram here, you can see that price is trending, and we have an established support level here, and price broke that support. There's a breakout. You can see the label here, breakout below support. Now, these are key principles in trading. When price breaks a support level, what happens is that it retraces back to retest that previous support level. Whenever there's a breakout below a support level, there's going to be a retest. You can see pull back to previous support, now acting like resistance. I said earlier, when resistance is broken, it can become support. When support is broken, it can become resistance. So this is support turn resistance, and from there you can look for an entry to sell further. If they sell, a retracement and further continuation. So you can see support broken, retests to become a resistance. From there, you look for opportunity to sell, and you can see price going down further. Now, these are tools used in identifying support and resistance. Trend lines can also be used to identify support and resistance. But I'm not going to go into this today. Next week, we're going to have a full class on trend line and how you can use them. But generally for here, trend lines can be used to identify support and resistance. And on a general note, a trend line simply is a line that helps us to identify the direction of trend. And in an uptrend, we just connect the higher lows together with the trend line tool. Connect the higher lows together with the trend line tool. And the higher lows are also acting as a support. They're acting as a support from where we expect price to go higher. All right, but like I said, we're going to have a full class on trend line next week. So just watch out and don't miss it. Now, moving average can also be used to identify support and resistance. In a downtrend, if price hits the upper part of the moving average and does not break out below it, that level can act as a resistance from where we can look for opportunity to sell. And here and here. So you can use moving average also to identify support and resistance. And this is just a simple diagram showing us that when price breaks a support level, I've explained it, price breaks a support level, goes back to retest that support as a resistance, and continues trending downwards. And this can actually generate for you a sell signal. It can generate a sell signal. Yes, the link to the video we made available in your WhatsApp group. Just watch out. If you're on Telegram, any of the groups where you got the notification for this class, link to the video we made available. This one I'm showing you can be used to generate trading signals. Price breaks the support, retest it as a resistance, and trend further downwards. So from this region here, you can look for an opportunity to make a sell entry. The same thing, price can break a resistance, retest it as a support. From that support zone, look for entry opportunity and ride the trend higher into the bullish direction. And that's just, we're going to show you more of this. Again, here you can see price trends up, hits an old resistance, retraces downwards, price breaks the old resistance, retest it as a support from where price began to trend higher. Here's another example. We have an established resistance, an established support. Price broke the resistance, retested it as a support from where an entry was generated, and price trended higher. And more of this example. Here also we have a resistance. Price broke the resistance, retested as a support. That generated a bullish signal as price went higher. Later on, price retraced back to that support, generated a bullish signal again, and you can see price trending higher. And here we have a support zone. Now, we'll still get into candlestick patterns with time, but when you have a candle, all these longer parts here, we call them the shadows. Here, the shadows of these candles are used to identify the support zone of this particular sector. And at support, you can see price trending higher. All right, that's going to be all this afternoon. This is just what I want to show you. Make sure you join our analysis session every day, Monday to Friday, 7 a.m. 12:30 p.m. And these are concepts we use during our analysis, and these are concepts we use in generating trading signals for you right here at PB Prime. So we're teaching you what we use. So make sure you don't miss these sessions so they can get proper and more applications of how to use these tools to improve your trading results. All right, I'll take a few questions and so if you have a question, you can go ahead and type it in the comment section, or you can unmute your microphone and you can ask. You're welcome, El Smart. You can type a question or you can unmute. Don't forget, we have physical training tomorrow, both in Abuja and Lagos office. Abuja office is 10:30 a.m. and the venue is Work and Connect Building 50, Ebitu Ukiwa Street, Jabi, Abuja. And Lagos office is 11 a.m. tomorrow. The venue again is 54B, Agos Executive Business Lounge, 54B, Adeniyi Jones Avenue, Ikeja. If you live in Abuja and its environment, or Lagos and its environment, just make yourself available at these two offices, for training how to trade. All right, so in the absence of any question, yes, when price retests the support or resistance multiple times, it means that zone is, is a very strong one. And another point you need to note is that the higher the time frame, the stronger the level of resistance and support. So on the MetaTrader platform, for instance, the highest time frame is a monthly time frame. So that's the strongest resistance level of support you can have as a trader. And that means that is a very strong level that you can use, meaning there's a high probability that reversal will happen, on the higher time frames compared to the lower time frames. So lower time frames for support and resistance trading, I will encourage to avoid lower time frames like 1 minute, 5 minutes, even sometimes 15. not be so stable. But anything from 1 hour time frame is good enough. But the hour time frames can actually even point you to major trend change in the market, which you can use to, pick very good high probability entry signals. You're welcome, Kristen. Elsmart, you said on 1 hour, for instance, the USD CHF. I'm sorry, I'm not clear. That's not clear enough. Can you break it down so that I can understand what you mean? That's Elsmart. I need more clarity on what you're trying to say. Then on the platform this afternoon, you don't have an account with PU Prime. Go ahead right now to our website. I'm dropping the link, www.puprime.com, and open a live trading account. And if anyone has reached out to you from PU Prime before now and sent you a registration link, kindly make use of that to register. You'll also be required to verify your account, and you need 2 documents to do that. Your proof of identity, which is any government issued ID. That can be your international passport, your driver's license, your voter's card or NIN, any one of those 4 you can use. And you need another document for your proof of address, and that could be your bank statement or any of the IDs I've mentioned that carry the address. Any one of them can also be used. The only thing is that don't use the same document you use for proof of ID as a proof of address. No, just use one, and that'll be fine. Okay, you say price keep retesting a zone on 1 hour USDCHF. Okay, so let's go to the chart. I'll just oblige you on this. Let's go to the chart and see what else Matt is trying to say. All right, so this is a MetaTrader USDCHF. Okay, as Matt is saying that price keep retesting 1 hour on USDCHF. So let's check. Yeah, price is retesting this multiple times, but then you can also see that volatility seems to be very low on this instrument for now. And when we talk about retest, we're not talking about, you also need to look at the frequency of how price is touching that level. Sometimes it's better if there's a wide gap, between the each of the lows. This is quite close and it's even a 1 hour. For me, I actually like to look at this from the bigger picture because that is more powerful than the lower time frame. I'm talking about the daily, weekly time frame. That's actually what I look at more often. For example, earlier on in the year, I gave some analysis right here where I said it in January that I'm expecting a massive bearish movement on the USD CHF. You can check out our videos from January. You find it there. I said I was expecting USD CHF to drop. Why? Because price hit a resistance on the weekly time frame 3 times. This is January. The third touch happened in January this year. This is around January 5. And I said it to expect a drop to the next support level. And between January and early April, price actually did drop to the tune of over 400 pips. That's what we're talking about. If I was 600 pips drop, when you check support and resistance on the higher time frame, it gives you more quality signals. Now, I'm not saying don't use what works for you. I'm talking about what generally works and what is generally acceptable. So if you look at the same here as the CHF, it can actually be looked at as, you can see here, we have price acting as a support at this point. Price broke the support to become a resistance and then led to some bearish movement. Became resistance here, bearish, resistance, bearish, resistance, bearish. So each time price returned back to that level was still holding as, at least on the upper part as a resistance. And here also, they acted as a support up until recently when price broke the support. So the structure is broken. It has broken the support. So technically, what we should be expecting now is that price will return to the previous support as a resistance for a further drop. Now, these are technical analysis concepts. So when price breaks a support, we expect it to retest that support as a resistance and drop further. So when it retests it as a resistance, this is a retracement back to the last class. Then the continuation is the bigger move we'll expect further later. I hope that clarifies this to Elsmart and any other person there. You're welcome. Any other question as a roundup? All right, so in the absence of further questions, we're going to end this class right here. Don't forget to watch out in your WhatsApp group or Telegram group for the link to this video. I will encourage you to watch it over and over again so that you can get a clear understanding of this. And trust me, if you adopt this, as part of your trading strategy, it's going to improve your trading going forward. All right, I'm signing out here. Take care and enjoy the rest of the day. Bye-bye.